The following is a presentation of TFNN. The Bull Bear Binary Option Hour. Brought to you by Nadex. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom and Tommy O'Brien.
Welcome, folks. Tommy O'Brien. Tom is on vacation coming into July 4th, and I am fortunate to be joined by our man Basil Chapman again this morning. Basil, good morning. Good Friday morning. Hello.
Good morning to you. How are you?
I'm doing fantastic. How about yourself?
Very good. Thank you.
That was a great 10 o'clock update. Thanks so much, as always, for doing a great job.
Thank you. So
what do you have coming up this weekend? It's an interesting weekend in that we come back for a half a day on Monday. We will be here at TFNN for a morning programming on Monday. As the market's open till 1, I believe we'll be going till at least 12. Basil, are you going to have a show on Monday, Tiger Technicians Hour?
Yes, I will.
Perfect.
Yes.
Okay, I didn't even know the answer, but I thought I'd ask you on the spot. I thought you were going to be there, and I'll be here as well. So we'll have a morning session, but it's kind of the beginning of almost a 4-day weekend for all intents and purposes.
I would even say a 3-day weekend. I think most people who have any common sense whatsoever would take off Monday.
Right. For sure. So we'll see what happens. Let's take a look at the market. Dow, we're getting a little bit of a boost, taking back some of yesterday's losses. Dow's up 93. S&P's up about 5. Basil, I was jumping around to the VIX. How about the VIX yesterday? Did you see that intraday, the spike that we got up to above $15 as kind of the market was gaining some momentum?
I saw it, and I was very upset because the day before we had the VIX and we got out. But,
okay.
Let me just show the charts. It's much better that way. If anyone's looking at my charts, on the left is the daily. In the middle. Sure. Oh, okay.
There we go.
On the left is the daily. In the middle is the weekly. And on the right is the monthly.
Okay.
If you look at these spikes in the weekly, and this is really the clue to the whole thing, and one of the reasons why I said that we could have a pop-up today, there are a couple of things that I was looking at. But if you look at this, you will see on a weekly basis that very often there's a spike. If there is a spike above the black line, which is a 200-period moving average, but especially this orange, I don't know if you can see. Yeah, you can see it. This orange line that goes right across there, that's the 200-period exponential moving average. The times that we've gone above, we have not stayed above for more than 1 or 2 bars before the turn occurs.
Right.
But most of the time is intra-week. You'll have the pop to the upside, and then within 1 bar, this is a weekly chart, it's already back down under it. What's interesting is it's occurred in even a more vicious form in the, let me expand this, in the weekly 9-period exponential moving average. Barely ever have we closed above the on a Friday, above the 9-period moving average. And if you did, boy, the next week it just went right down. But very often, the Thursday is the high, and by Friday it gives it back.
Okay.
So this is going to be very interesting. Why? Because you'll see, let me expand it even more, that on the weekly chart right now, we are, even with today's very strong up move, and that's earlier on, and the Dow's given back some. It's only up 68 right now.
Yes.
Look what's happened. The VIX has gone back over the 10.88 level to 11.38. This is the big test, because it's saying to me that fund managers this time are saying, you know what? There is enough going on that we want to be buying some insurance. At this point, I'm thinking of it only as insurance.
Sure.
If it starts to hold in the high 11s, even gets to the 12s on a closing basis in the daily chart, that becomes more than insurance. That becomes a trade. This is the way I like to interpret. I try to make it as simple as possible. I also look at numbers so that when I'm looking at the volatility index, the makeup of the VIX index is very interesting. Sometimes it changes slightly, but it's basically the futures, the measuring the volatility, the fear factor, or the complacency of the near-term futures. But I like to look at it more as a number, and I've done that for a very long time. And the number to me says at some point, the way I'm looking at the market, the way I'm looking at the different sectors, they rotated the NDX 100, the QQQs led the market up. Then we got the S&P that made its all-time high. And then I said, oh, now I've got to be careful because now the Dow could follow. The same day the Dow went to its, I think it was March the 1st, went to its high. The New York Stock Exchange went to its high. And then we got the IWM. Now it's the reverse. And actually the semiconductors, the SMH has really led the whole thing up. Now I think we've got the reverse. And that's the reason why I think it's a very appropriate moment that you just mentioned the VIX index, because it screamed yesterday to 15.16.
It did, man, and it was just under $10 not that long ago, and it's not like we got some kind of 300-point down day, you know, in all fairness. It wasn't...
that was exactly the point I was going to make. You took the words out of my mouth.
Perfect.
It's not as if we were down. We got to close to 300 points, but we weren't down 300 points with a consensus right across the board of major selling that closed at the lows. It was just like an intraday. It was like the same thing that happened. What was the date? Was that the 19th? No, the 12th of June. We got the same thing. Volatility index screamed up, and then all of a sudden, at about 12.20, it pulled back. So very good points that you're making here. Yes.
I mean, there's some volatility to trade there for sure, and I think one of the keys as well is quick fingers, because if you are long that,
yes,
we see it continually, those spikes do not last. At least recently, they don't last.
Yes. Correct.
Okay, folks, come on back. We'll see where the market goes. Dow's up about 70 points. S&P is up 2. Come on back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. We take your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Option Hour, Basil Chapman, Tommy O'Brien. So let's take a look at this Nadex platform real quick, Basil. You know what, as we jump, so Nike, one of the stories, right? Nike with some good earnings. I happen to have this chart up, trading at $58.04. Closed last night around $53. A lot of great expectations coming from them. They did well, and we'll see if they can deliver. That's always an interesting fundamental take on things, right, Basil?
So this is very interesting. So Nike, and I remember discussing this on my show going into January. I said, you know, everything I'm looking at in Nike suggests to me that they've made what I call a hat-trick top. In other words, I'm getting to an E or an F in my notation in the Chapman Wave in the monthly chart. It says, now go and look at the weekly chart, because if you're getting some kind of a top in the weekly chart, then you've got to look at the daily, and that would suggest that the daily will be the rudder, the trigger for the move,
okay.
And then that sets off a domino effect. So let's go and I'll show you what happened. The daily, if I've got the notation, the daily made a top. I'm squeezing, there you go. So the daily made a top way back at a peak E, and then it made what I call a rogue wave. I remember discussing this. It was a perfect example of a technique I have in my CD introducing the Chapman Wave methodology. It's called a rogue wave, where all the technicals are starting to fail, and this occurred in Nike back in November the 27th of 2015. There was a double top, a V-shaped pattern. Starts coming down, the MACD is turning down, stochastic, everything looks horrible, and you're absolutely correct in being short right now, except there's this one news event. I like to say that there's a sign at the beach that says high tide at noon. So at 12:05, you're right at the furthest rock, and you think it's nice and safe. You got your blankie, you put it down, you got your suntan lotion, you got your sandwich, you got everything, put your dark glasses on, and then splash, there's this one wave that never saw the sign. You're wiping your glasses, say, what happened? And the tide's going out, you don't understand it. That's the rogue wave. That's the wave that didn't see the notice that said high tide was back in November, and all of a sudden on the 23rd of December, it's a spike to 68.23. And that spike lasts just long enough to have the people who got out say, oh, I was wrong, I'm going to go back in. So they get back in. It says to the shorts, you are crazy. Why are you shorting the best stock on the market? So they cover their shorts, and within hours, that's exactly what happened. Within hours, there's a tumble, and it goes from 68.23, and within 2 days, it's down to 62, and that was it. So I remember discussing that as an example, and then you'll see the weekly chart made a peak D. That's what we always look for, the second peak D right there. First one was back in July, August, and then all of a sudden that 25th of December. So I'm looking at this, and I'm saying to myself, wow, retail has had a terrible time. My suspicion is that if I'm looking at the monthly, I don't see it anything as a bounce right now. It'll already have to prove itself by pushing from 57.64 right now into the 62.60. No, I would even say 62 to 64 area, and I'd say, wow, that is a great recovery. Now I can even think that there's a U-shaped pattern. It could go back to the 68s. Right now, when you go, you know, if you look at sneakers and if you look at the clothes, especially in the Nike area, there is so much competition. And fashion has changed to the point where, and this, let me just mention, this is also a spike on a Friday to leg E, a gap up leg E. So I'm going to be watching this one real closely because there is competition there. So I wouldn't be surprised if things are a little bit biased towards giving a good report.
Companies like Under Armour, right, weren't even around 15 years ago, and now the size of the chunk of the that space in retail that they take is obviously enormous when you think that they had the ability to create a company from nothing like Under Armour and compete with the likes of a Nike, let alone the many other retailers you're talking about who are competing, whether it's, I was just hearing a story on Bloomberg about Adidas. They were in single digits for market share, I think, and now they're in double digits, so, whether it's 12, 14, somewhere in the low double digits. That alone is huge. Now, I think Nike has over greater than 50% almost market share. So there's a lot of market share that they have to try and hold on to almost, rather than they have big growth plans too. A lot of that earnings number, we can go over the exact earnings, but a lot of it is future expectation really is where some of that growth is coming from, which is always a little bit worrisome, right? Especially in their space, yeah.
It's interesting you mentioned Adidas, because when I was in my teens and I was a sprinter, I wanted to get a really good pair of spikes. We call them spikes, the running shoes.
Cleats,
and
yes.
Adidas had the 1-inch spikes. There were 4 on each foot. But I went with a company, an English company, a leather company called J.D. Law, and I'm absolutely sure that they've gone out of business a long, long time ago.
Sure.
And they had 6 spikes, and they were 1/2 inch or 3/4 of an inch. And for my sprinting style, I said, I like those very much better. But every time I look at Adidas, I have to think back, because it was a choice that I made. Didn't go with Adidas, but they've been around a long time.
It seems like more people were going with Adidas than you were then for them to succeed, right? And Adidas has a good brand. It was surprising for me to hear how much Nike has over 50%. Adidas has low double digits market share, where that's a startling number. But we all know Nike dominates sneakers to an extreme degree.
They absolutely do. The other thing was, it's interesting how companies that have survived can only survive if they reinvent themselves all the time. And I think, it's probably why Adidas has survived. So UAA is the symbol now. It used to be UA. I don't know what happened. They changed the symbol, so I don't have my notation. But UA had the same thing. I remember talking about this back in November of 2015, going into...
Yeah, they're struggling.
And also a sharp pullback. So I'm going to be watching something like a Nike, because if it survives, if it's able to really, it not only has to invent itself, it has to invent its whole sales.
It does, the whole how you deliver to the consumer.
Yeah, absolutely.
I imagine they're going to be trying different things, right? I mean, that's where they're talking about, they're trying to not downplay it, but that the Amazon is a very slow rollout, only certain shoes, those types of things. So I imagine they're going to be putting feelers like that, whether it's their own website, other retailers, web retailers, and figuring out how best, why can't Nikes be, in theory, on Target's site, right? If people are going to Target. Target has a huge mass following. If you join that Target Red Card, I believe you get free shipping, you get 5% off. So that's maybe tapping into those types of retail deliveries that are already going to the consumer, because I agree. It's now, and then what happens with Foot Locker, right? I heard Foot Locker is the biggest laggard in the S&P, I believe, this quarter possibly, or maybe this year. And there's and you look at them recently, right? It's probably for the quarter. As I look at that chart falling off in April, it was probably the biggest laggard for the quarter. And then, man, oh man, that is quite a monthly chart there on the right. You've got Bezel.
Yeah, I think every chart you've mentioned, they've got this waterfall. It looks like a picture of the Grand Canyon. You've got this cliff that goes straight down. This is going to be very tough.
It could be a double whammy on some of these. I mean, it's interesting. I was hearing the argument that Foot Locker's in actually a good space, a better space than some retailers, right? Because they have.
I've heard that for a long time. The chart doesn't say that.
The chart doesn't say it at all. But then the other side is, what if it is a double whammy, and what if Nike just starts cutting them out of the middle, and they start losing the foot traffic of the malls, right? I mean, they're losing the ability to play a role almost. If Nike can deliver their product to consumers, why get middled by a company like Foot Locker? Okay, folks, come on back. We're going to be talking with our man Tom from Plymouth. We're going to be looking at biotechs. Back in 3 minutes. Come back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Folks, Basil Chapman, Tommy O'Brien, June 30th. It's Friday. We're coming into the long weekend. Technically, it's not a long weekend, but we're going to call it a long weekend. Let's go to our man Tom in Plymouth. Tom, good morning.
Hey, good morning, Tommy and Basil. How are you?
Hi, how are you?
Doing great. How are you doing?
I'm doing fantastic, thank you.
Good, man. Good. So, what are we going to take a look at? You looking at some biotechs?
Yeah, I'm in the LABD, which is the short of the IBB. 3 times.
How long have you been in? How long have you been in?
Oh, probably, I think it was 2 days ago. So I don't like to hang around too long, but...
Okay, so he's looking at LABD, which is Direction Daily, S&P Biotech Bear 3 times. And so this is up about 3% today. Of course, these move quickly when you're looking at the IBB, which you're technically going to be short. And that's been quite a volatile little index recently. So, Basil, what is your take on, I mean, we were as high as 322 only on Monday in the IBB. We're trading at 310 right now.
There are a couple of things going on. One is, if I think fundamentally, although this is a period where I anticipate that because it's held very well, having gone down to the 240s, 250s, and now it's up at the 320 level. Fund managers who were rewarded every hour, not just every day, but every hour for up until mid-2015, they could not do anything wrong. If they bought, no matter what day it was, if they bought IBB, By the end of the day, they were looking fantastic. And so that habit was very hard to break. They didn't believe the top that was made back at 400 in July of 2015. But since the low that was made in January of 2016, it's held well. And my suspicion is that there are a couple of companies within that are doing quite nicely. But I think that the overspending, I just know from this whole Kendall Square, the Cambridge area at MIT.
Sure, there's a lot of biotech companies, right? I mean, Tom, I'm sure you know that too. Yeah, go.
The buildings that have gone up and the spending it's out of sight. And I think that that's going to continue to be a problem. So I'm looking at this and saying, my monthly chart suggests that at some point, IBB starts to break down. The big clue to me was the action over the last 5 sessions, because it screened up to 323.45. I've got that as a peak C in the Chapman Wave. It just missed making a D if the high on the 9th was 298.55. If the high on the 14th was 298.56, I would have got my D and I would have said, okay, that's it. So unfortunately, it's a C, but it's what I call a gray C because it's underneath the most important high that was made back in July of 2015. However, the weekly chart is making a peak D as we speak. So the reason why I wanted to go through that little scenario is to say that the speed with which you got that rally, which I think was based on a number of media stories, well, it looks to me, because it wasn't able to push above 323.45, and today even was a really good opportunity for them to be in the focus point of fund managers saying, hey, you know, this is the one area that's held quite well. Why not? Today should have been up at 315 and it's only at 311. So I think you're in the right position.
Tom, what were you looking at when you were making this? Were you looking at a pullback of that recent, huge escalation kind of last week, a short-term trade? What are you trying to do?
Yeah, I was watching it for the past couple of weeks, and I saw the LABD. I was watching the IBB too. I saw it go up, and I was watching the LAB come down. It was, okay. So I jumped in it. I think it was last week, and then got out. It rode it up a little bit, and then it came back down to like 640. I jumped in it again this week, and I said, 690 is 50 cents.
Listen, and we know how quick these can move being the triples, as in you can be back down to 640 in a heartbeat within the next hour, right? For sure.
So, Tom, would you be considering this as a potential longer-term short rather than just the quick trades? Because if that's the case, I would not use the LABD. I'd more consider the BIS.
I think he's going short-term, but Tom, what do you?
I'm in it for very short-term usually, Basil, and that's why I was wondering. I said, well, I'll watch it. I don't really like to go over the weekend with this, but I got a feeling that the market may come down in the beginning of next week, so I might either liquidate half the position and just carry half of it over the weekend, or maybe get rid of it all. It depends on what it does, maybe this morning or this afternoon,
So then why don't you make it easy for you? I think I love that plan, and what I would do is make it easy for yourself. What if it's at 683? If within it's at 10:30, let's call it 10:35 right now. If at 11:15 it's managed to go to 692, I would just raise the stop, make a pretty tight stop on half the position, and if it still remains above 670 going into the close, I think your plan is very good, holding one part of it over the weekend. The other thing is this, that if it breaks down here and goes even to 678, I would just say, you know what, I don't want to hold this over the weekend.
Sounds like a great plan, guys. Thank you very much. You both have a happy 4th.
You too, Tom. Thanks for calling, man.
Tom.
Enjoy. Be safe. Have a great holiday.
I know.
Yeah, man, quite a move in those biotechs that week before, escalating up, and then, of course, a little cascade back down. And when you're trading the triples off of an index that can move that quickly, man, you can definitely get some volatility going.
That's the reason why he's planning to take off half with a profit and then have it's not a gamble, because if it closes near the high of the day, that's good. It means that the IBB is faltering. I think that's a good plan. And I had a question in the den about Celgene, which is part of the biotech Celgene. It has the same. This one did make that D. This one followed the IBB beautifully. So I'm suggesting that keep an eye on something like a cell gene. It's a good clue. It's at 130.25.
Yeah, and anytime you're dealing with that type of volatility over a weekend, and you can almost call it a 4-day weekend potentially if you stay active the whole time, as in you don't necessarily plan on getting out in the Monday morning session. Man, these biotechs can move quickly. One company can really send things dramatically. So taking some off the table, locking in profits, it really is going to help kind of average out those times when you do, if you hold a triple like that over a 3-day weekend.
Well, that's the point. The triple, for anyone who's traded the triples, it's the percentage of the move. It doesn't look like it's moving much, and then you look at and you say, oh my God.
And that's why Tom just got in at 640, and he calls so often. I knew it was going to be a shorter. He's a few days, and that's really how you should trade them, because they do oscillate, and man, they can eat you up if you're in there too long, but they can also just give back all your profits if you're in there too long as well.
The reason why I want you to just go through the little preamble there was because it sounds like he's focused and you had the patience to wait. If he has the patience to wait, it means that this is his focus, one of his focuses, and therefore the IBB is suggesting that at 311 right now, if by the end of the day it's closer to 310 or 309.50, he's got himself something that he can just keep going back into that LABD. That's the reason why I wanted to bring up as a tide. The tide means that if it fails from here, it's going quite a bit lower down.
Good call, Basil. I like it. All right. The show is flying. Come on back, folks. We got the Dow up 88. The markets are jumping around. S&P's up 4. We'll be back in 3 minutes. Come back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Basil Chapman, Tommy O'Brien. So we get the markets cascading a little bit. We're lower than we began the morning and the show at Basil for sure. Let me pull this Nadex platform over here. We'll take a look at how some of these futures are trading. We got the S&P right now, 2420. We were size 2428, right? And even if you look at, let's jump to the NASDAQ. NASDAQ 100, we're up at 56.85. Call it, we're down 56.55. So some volatility. It's only 10:30. We have till 4:15. Maybe we see some action as we come into the day.
Is there something that was on your mind this morning that you were looking at in particular?
Not really. It was just interesting to see how we, came back yesterday off of the lows and then jumping around up as high as 100 and then kind of right at 9:30 this morning. All the indices, whether it was the S&P, the NASDAQ cascading a little bit. We have crude oil somewhat unchanged, gold getting a little bit of volatility, but trading about 1243 where it was yesterday. A quick note, we're doing the bull bear binary option hour. We've talked about they're coming into the new charts. If anybody out there is using the Nadex platform and you want to try those new charts right now, you can just add, once you're logged in, question mark and then capital HTML and then lowercase chart equals true. And you can kind of see it right here. I'm going to highlight it on the camera. It's a little small, but question mark HTML chart equals true. You add that in, throw it into your URL, and then that immediately puts you into the new charts to get used to them. Quick note, check it out. And then they're good charts. And I knew that, some customers had problems with Flash, and I believe that this is going to solve that, so it should be a much better user experience. And they're coming either way, so get used to them. So what are you looking at, Basil? What do we have coming up for the Tiger Technicians Hour?
So I'm looking, besides the fact that it's the end of the week, it's the end of the month, and it is the 6-month period.
And it's the end of the quarter as well. Same.
Quarter, yep. So what I'm looking at here are monthly or weekly charts, and that's going to be really interesting, and I'll show you why. Well, first of all, you remember yesterday we were looking at the charts, and I was talking about the fact that there was a Chapman Wave 5 to the downside in the 120-minute chart, and it was also a potential trough E. That we had gone to a 5 and we had a spike to the upside, and the 120-minute chart, in my new methodology, I'd call this an X, and I was expecting a move to the downside, but I said we need to break 21,310 on the Dow to start the daily. That's what it was, to start the daily leg 5 down. And so we got that yesterday. And that was one of the reasons why I said to subscribers, let's have a little patience. There should be a bounce today. It's how the balance holds, because it's going to impact the weekly charts. It's really important for me how we close at Friday, 4 o'clock. And that's going to be this afternoon.
Yeah.
And I'll explain why. Look, the Dow at 21,000, I've got to hit the right thing, at 21,535, let me get this, INDU, 21,535 on the 10th of June, has had the quickest Chapman Wave leg D that you can get, either up or down, and it takes seven bar. I used to call it the 7-wave form, in fact. And look what happened from that peak G on the 10th of June. You went 1 bar down, 1 bar up, 1 bar down, 1 bar up, 1 bar down, 1 bar up, and then whoop, you got that leg D yesterday. That suggests when you get a very quick peak A, B, C, or D, or usually it's even just C and D, that you're going to have some kind of a pullback, and it works the same on the reverse side to the downside. But the MACD is still it didn't even recognize the rally attempt yesterday. It's very poor, and the stochastic is still very weak at 55%. So that brings me to the weekly chart, and I don't see how today we can go above 21,535. However, what is fascinating, since June the 6th, since June the 10th, we've had a lot of volatility, but actually it's just certain sectors like the SMHs, the semiconductors, the QQQ, and I've been talking to Tom about this for about 2 weeks now, saying I think they led us up and they will lead us down to make this rotational correction very important. And I have to still keep it as a correction because, look, the Dow has gone a sell mode in the daily. The weekly hasn't even gone below 21,170. The 9-period moving average, if I look at the S&P weekly, it's gone, but it hasn't closed below 24.14, 24.23. It's at right now. Yesterday it went below. So that's a hint to say that that 9-period moving average for the first time is becoming a magnet and at some point should become a resistance area. That's why today's close is so important. If you look at the Qs, I have a sell mode in the weekly chart, not even sell signal, but a sell mode in the weekly QQQ series, the power shares, NDX 100. I have a sell mode in the semiconductors, down 17 cents. So they led the way up. I'm watching to see how they lead us on the way down. You've got the XLF. Everyone always asks about the XLF.
Definitely, I know, because that got some action yesterday. Yeah, go ahead.
Got some action, but a news-related action, and I've got it as a leg E. So how it holds is going to be very important because I have seen in other periods where your market is very weak and you might have the housing stocks holding well, or the market is very weak and you might get, it used to be the IBB, the biotechs. Now they don't. Now they pull back with the market. But there was another period I remember seeing the autos. Can you believe? Look at General Motors. General Motors is at 34.86, just made a recovery high. Why is it not down at 32? After all, market's kind of shaky. Look at Ford. You would think that these stocks would be holding quite nicely. So this is what I've been saying to subscribers. It is a rotational market. You can pick individual stocks, but if you're picking individual stocks to be long, going against the tide, which mostly now is to the downside, you've got to have really good technicals concurrent with whatever you're looking at. But mostly, I think the theorem I have is the semis led the market up, and the semis are now leading the market down. Within that, how does each sector hold up? But I think that we are in for a shaky couple of weeks coming up.
Yeah, we're getting a little bit of volatility, that's for sure. And let's jump, more than we have been in terms of yesterday, almost 300. We opened up today up 100, which is relatively interesting, especially when we could have faded yesterday and today into nothing, right, into a flat calm market, and it would have been very expected and not surprising. And we had almost 300, down 150 yesterday, opening up 100 today. And jumping around a little bit. So with a long time left in the day today, and they're asking in the den, could we get the volume for a big move? And there's definitely people on vacation, right? But a move can happen without the volume too. That's
What I typed into the den a moment ago to answer to a question, my thinking here is that we're going to see very light volume as fund managers decide, let's use this opportunity to raise some cash. I think that's what I'm seeing. I don't see very intense selling except in a couple of areas. I think money is just kind of gently coming out. They're just building up a cash hoard for this part of the summer, which I think will be put to better use a little later on towards the end of the summer. That's kind of what I'm thinking.
They better not pull out too much cash. We'll see what happens.
Well, that's the thing, right?
Right. Basil Chapman, Tommy O'Brien, Bull Bear Binary Option Hour. We'll be right back, folks.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Basil Chapman, Tommy O'Brien, Bull Bear Binary Option Hour. It's Friday, and I want to give a quick plug to our man, Mr. John Logan. So right on the front page of TFNN, TAS Market Profile Scanner 30-day free trial special with John Logan webinar. And also another plug, John Logan's going to be hosting for my dad, Tom, this afternoon, 3 till 4. So jump into that program and jump into this scanner, okay? We get a free trial for 1 month. You can get it, pay nothing, cancel at any time. And really what I wanted to go over is just that there's a 10-minute video right on this order page. Check out this video. You can click it. You can watch it right here. 8 minutes, 55 seconds. You can click it, watch it over on YouTube. But they really just kind of walks you through what the scanner's doing, a nice introduction, and it's going to be a great webinar on July 12th with John as well. So we're looking forward to hearing him a little bit more in the air, getting him back involved. He's just been a busy man working on this scanner, and he's put a lot of great stuff in there. I know you love attending all the webinars we do, Basil. You wanted to check out Mr. Larry Pezaventos.
Absolutely,
we got you that link.
It was a terrific program that he had.
It was, man. I told him the next day. I really thanked him for putting some time into it, because 2 hours, he had a plan, because talking for 2 hours can be tough, man. You really need a plan and an outline.
Good.
And it was a good deal. So that's July 12th, but check it out. You'll get an automatic link, download the program, and you can be playing with it this afternoon. And man, I use it all the time. It's an awesome scanner. It is. Okay,
Great.
So coming back to the market, we're getting a little bit of a slide. Dow's up 50, right? Nasdaq's hitting a little boost. Go ahead, Basil.
So I wanted to just say I should have said it about 10 minutes ago.
There's that H. More. I see you drawing.
I had already drawn the H in. I can't remember if I actually showed it or not. I drew the H in. This is the pattern in the Chapman Wave methodology we look for all the time. How do you test the left side low? Now, one of the things I like to say is that markets come down at the same speed they go up, and they go up at the same speed they go down, except for those crash moments. And you can see this here, even though it's a 2-minute chart, this looks like a crash moment. But here it's just, look at the beautiful normals. So you go 1, 2, 3, 4, 5, 6, 7, 8 bars up, 1, 2, 3, 4, 5, 6, 7, 8, 9 bars down. And look at the symmetry. I love that kind of symmetry. Tested exactly the 24.1850 level. So the parameters I'd be looking for the, at least in the next hour or so on this 2-minute chart, a close below 24. Let's call it 24.1750 on the futures, a close that is. Suggests it's going to go lower. and a close above the 200-period moving average, this green line right here, 24.22, says, hey, you could go higher. My thinking is going to be tremendous resistance in the 24.22 area, and then we're going to chop around and probably close a little bit weaker.
Yeah, we could definitely trail off as the afternoon approaches, that's for sure. Everyone's got to beat the traffic no matter where you are, right? Long Island, Cape Cod, West Coast, there's got to be traffic everywhere Friday afternoon. So beating that.
I've never seen so much work on the highways. Every highway's got somebody standing doing work. So that's not helping traffic at all.
And it's almost like no matter where you are, that can be said sometimes, right? I mean, we've had plenty of construction even in Tampa, Boston, I know, big experience.
I actually don't mind because, I don't do that traveling too much, but I don't mind because it's making the roads better, and I just want good roads.
It's important, man. It is, for sure. And let's jump over where we have the VIX trading again, 1126. So if it trails off, you'll probably see that VIX trickle down to under 11 maybe by the end as we creep into the market. But anytime it goes under 10, I was talking to Tom, my dad, and anytime under 10, we're saying that is probably a buying opportunity as long as you have the quick fingers to get out anytime it gets those spikes, as you talked about, Basil. Very quick, 1 day, 2 day. And maybe I'll have to pay attention to Thursday from now on, I guess, right?
Well, I think that, and I couldn't tell you how many times that Friday it's just gone right back under the 9-period moving average.
It has. Everything's good by the weekend, Basil. Everything's good. No fear for the weekends. We work that all out during Monday through Thursday. Friday, we go relax for the weekend.
Good.
Awesome. Well, have a great weekend, Basil. I appreciate it. I look forward to the show at 11 o'clock. Thank
you very much, Tom. I always enjoy it.
Definitely. Thank you. All right. Stay tuned, folks. A lot of great programming. Options Hour, John Logan this afternoon. Steve Rhodes. Thanks so much. Have a great weekend.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.